So guys, I'll be analyzing all these currency pairs. Remember, I trade 32 pairs or so with one crypto, which is Bitcoin and gold. So I'll be analyzing all these pair, and it's going to be top-down analysis. So I'll be starting on the monthly time frame because I'm a swing trader. So I will analyze from the monthly, weekly, and daily for direction. Then I use 4 hour and 1 hour for entry. So I'll be starting with AUD card. So I will analyze the technical aspects. Then when I get the best pairs from my technical perspective, then I will check my fundamentals, which is the COT data, and see what I have. So AUD card, starting here from the monthly time frame, you can see that the market is currently testing. The market is adjusting a support level, which is this zone from here. So the market is testing support, which is pushing this market to the upside, and the market created this ICI. So my students already know what ICI means. I did not say ICT because I know that's what you're familiar with. I said ICI, impulse, correction, and impulse. And for this ICI, we expect the market to complete the ICI to the minus 0.272 of the Fibonacci, which is this area here. So from the monthly perspective, we expect this market to touch this area. Remember, this is monthly time frame, so this takes months to complete. So from our monthly time frame here, we are seeing a bullish move. Then going down on the weekly time frame, we broke below previous resistance, which is now on support that the market can also retrace to the downside. So we broke above this structure, and here on the weekly, it seems that the weekly is also testing resistance, which is this resistance from here, and we expect a slight move to the downside from this aspect. Remember, our overall direction from the monthly time frame is a bullish direction, but from here on the weekly time frame, we expect just a slight move to the downside. So let's see what we have on the daily time frame. Now the daily time frame is overextended and it's currently reacting to the resistance on the weekly. So a move to the downside is expected from here, but I don't expect the market to retrace down to this zone here. The market can also come down to this zone, but since my monthly time frame is giving me a bullish setup, I don't expect the market to retrace down to this area. So if I get a correction from the monthly time frame, if I get a correction to the 0.382 of the Fibonacci time frame, then I will buy. So my students already know what 0.2382 of the Fibonacci means. So we have seen one retracement candle, which is this candle here. We will need another retracement candle to invalidate this correction, then the push to the upside will come. Now from here, I don't see any opportunity from AUD card next week, except we see this correction from the daily. So let's go to the next pair. Now the next pair is AUD CHF. Now AUD CHF from the monthly time frame, the market is testing a very strong support zone, which is this support from the monthly. So a push to the downside is expected from here. The market also created this ICI to the downside. So going down on the weekly time frame, you can see how the market created a very nice W pattern, but the W pattern is overextended. So a push to the upside is also expected from here, but deeper correction inside of this zone is expected. Now from here, we expect a correction from here, that's a rejection from this area, but deeper test of this zone is expected because the market cannot just drop from here. So the market will test this zone deeper before the move to the downside will be created. So let's see what we have on the daily. Now on the daily, the market have already started reacting to this zone, but we also need a push to the upside inside of that zone before the sell will come. So from now, there's no opportunity from AUD CHF. So let's go to the next pair. So the next pair is AUD JPY. So starting on the monthly time frame, remember we are doing our top-down analysis. So we can see the market is in an uptrend. So we have this uptrend here. I know some of you might be wondering about my uptrend that is not nice or something. So let me show you something. If you want to get the accurate trend line, switch your chart to line chart. So let me go to line chart and draw my trend line. Let's see what we have. So this is the trend line from the line charts, and this is the accurate trend line. So let's go back to candlestick and see. So this is candlestick and see it. So this is the correct trend line. Now the market have this overextended move to the upside, testing this zone, which a push to the downside is also expected from here. And the market also created a W formation, which the completion to the neckline is also expected. Now let's go to weekly time frame. From the weekly time frame, we have an overextended impulse, and a correction is also expected from this move, that the market will also create a double top from here. So everything you are seeing from here is a bearish setup, but this pair is currently bullish fundamentally because of the COT data. The JPY is currently weak. Only if we see a change of order when we check our COT data, that's when we know if the move to the upside is expected or the move to the downside. Now let's go to daily time frame. So from here, from daily time frame, the market is overextended to the upside, and a move to the downside is also expected from here, from this zone. So if we get a move to the downside from here to the 0.382 of the Fibonacci, then we buy to the completion of the double top. So no opportunity from here till we see a correction. So on the AUD/NZD, the market is testing resistance, which will push the market to the downside. Here you can see the resistance. So going down on the weekly time frame, we have an overextended W pattern, and the completion to the neckline is possible. Now this zone that we identified on the monthly time frame, you can see how the weekly time frame reacted to this zone here, so creating this bullish candle, and we expect the move to the downside to complete to the neckline. So our target will be this area here. So we expect this market to push down here. I can see an opportunity from this area. Then on daily time frame, the daily time frame have already created a double top. Let me remove this structure. So from the daily time frame here, we have the market testing this resistance that will reject the market to the upside, and a deeper test of this area is also expected before the move to the downside is expected. Now this market, I'll be selling this pair from the 4-hour time frame. If I see entry from the 4-hour, not 15 minutes time frame, I'll be selling from 4-hour time frame down to this zone. I'll be selling down to this zone. So I will add this pair to my red list, because I'll be checking this pair fundamentally before taking the trade. So AUD/NZD, I will add it to my red list. Then I'll go to AUD/USD on the monthly time frame. So on the monthly time frame, we have an impulse, and we have a correction also. Completion to the neckline, sorry, completion to minus 0.272 Fibonacci is expected, and here it seems the market is in a downtrend. From here you can identify the trend with this trend line. So the market can react to this zone now, and it's also testing resistance from here, which a potential move to the downside, short-term move to the downside is expected. Short-term move. Now let's see what we have on the weekly time frame. So the weekly time frame broke above support level, which is this support here. You can see how the market have been testing this area for the past 6 weeks, if I'm not mistaken. Now the market broke above this zone. So a retest of this zone with this W pattern created by the market. So I'm seeing a W pattern here, which the neckline is this zone here. So a pullback to this black line is expected only if our fundamental analysis goes the same way. Now the daily is also overextended, and a push to the downside is expected. So I think this pair will sell technically, but we have a strong zone here. We have a strong zone Yeah. So the market can first of all retrace to this zone, and if we check our Fibonacci from this impulse and check where we have our next move to the downside, so you can see our 0.382 is currently in line with this structure. Our 0.382 and 0.5, which is the main area for the retracement, this is the zone here. So this market will move down here before the potential move to the downside to test the neckline of the W pattern. So I will also add this pair to my watch list. So I will add this pair to my watch list. AUD USD. So checking the move on Bitcoin. So from Bitcoin, from the monthly time frame, the market is creating an ICI, but this is not a valid ICI yet until this month candle close. So from here we can see we have structure here. The market is currently testing it to the upside. So I won't trade this ICI until this month candle close. So let me check what I have on the weekly time frame. So the weekly is kind of testing a resistance level from here, but you can't see it clearly here except you go to your daily time frame. That's where you see the resistance clearly. Now the market is currently in a downtrend from a daily perspective, so you can see the downtrend from here, but overall crypto is bullish because we're expecting a bullish USD to push the market to the upside, and all crypto are positively correlated with Bitcoin. So you can't analyze BTC USD and analyze Ethereum, Dogecoin. If you are analyzing BTC USD, you are analyzing all crypto currencies. They move in the same direction, except when they want to manipulate your trades. That's when you see some cryptos moving up and some moving down, but all of them move in the same direction. So from here, I think we have an opportunity from here. This is not an opportunity. The market is consolidating. So let's check CAD on monthly perspective. Now the monthly is also creating an ICI, but this ICI is not valid yet until we see a close of this month's candle. So checking the impulse and correction from here with our Fibonacci, the market have already tested the 0.618, which is the strongest level the market need to test, and the market is also testing a very strong resistance that will push the market to the downside from our monthly perspective. So all we are seeing here is a bearish move from our monthly, but the bearish move is not valid yet. Now our weekly time frame, can see how for the past 2 weeks the market have just been stuck inside of this resistance level. This is why you need to analyze from the higher time frame. Now this pair, now you can see this is the weekly time frame, and these two candles here is 2 weeks. Now for the past 2 weeks the market have been stuck inside of this zone. Now this simply means that this is a very strong resistance. This is a very strong resistance level, and the market is currently testing it, and the push to the downside is expected. So let's see what we have on the daily time frame. So on the daily time frame, the market is kind of stuck. The market is stuck inside of this zone, consolidating inside of this zone. Now I will only trade this pair if this month candle close bullish, making the monthly ICI a bearish ICI. So I will sell this pair from this zone. That should be by July, and the trade will run for like 2 months or so because it's on monthly time frame. So let's check another pair, CAD JPY. Now from here, our monthly time frame is bullish, and we have a W pattern created. So and the market broke above this resistance from here, but the W pattern, the neckline is this zone. So technically I want the market to test this zone, but it's only the fundamental analysis that will make it possible, that will tell me if the market is going to test this zone or not. Now the market is also overextended to the upside, and a correction to the 0.382 is expected. Now let's see where our 0.382 falls in. So we measure our impulse. Now the 0.382 falls in this resistance level. So the 0.382 and the 0.5 level. So this is our Fibonacci resistance, our Fibonacci support level. Sorry. So we have these two support levels here from our Fibonacci perspective. Now the move to the downside is expected only if our fundamental analysis corresponds with the move. Now going down on the weekly time frame, the weekly time frame is overextended and a move to the downside is also expected. So on the daily time frame, overextended and the potential move to the downside is expected. Now we are in a bullish trend from the daily time frame. So I will be selling this pair technically. So I will also verify everything fundamentally with the COT data. So I will add this to my watch list. Now Chef JPY, starting on the monthly time frame, the market is overextended to the upside. So I don't think there's an opportunity from here. Weekly time frame overextended. So this I will only trade this pair if I see a correction from the daily time frame. If I see a correction, then I'll buy. So there's no opportunity from here. Then the monthly time frame, Euro AUD. So Euro AUD is currently getting an ICI to the downside, which is currently testing a very strong support zone from here, which we expect the market to push to the upside. Now this is not valid yet until this monthly candle close bearish. So let's see the retracements where the market suggests. So the market is currently testing 0.618, which is the strongest level the market needs to test. Then on the weekly time frame, we have an M pattern from the weekly time frame, which the neckline is this area here. Now a potential move to the upside to this trend line is expected technically. Now I'm going on to our daily time frame, because now the daily time frame is currently reacting to this zone. So I'm adding this pair to my watch list because I'm seeing an opportunity from here. So Euro card, starting on the monthly time frame, the market is currently testing support from here, which will push the market to the upside. Weekly time frame reacting to that same support zone. You can see the green candle. So weekly is currently reacting to that support zone. So let's see what we have on the daily time frame. Now the daily time frame is, so if we get another move to the downside, making this corrective candle, 2 candles, then I will buy this pair to this zone. I'll buy the pair to this zone. But if I don't get 2 retracement candle, I'm not taking this trade. Sorry. So there's no opportunity from here. So let me check another pair. Euro CHF. Euro CHF, I've placed this trade, so no opportunity. Euro GBP. Euro GBP. This market is complicated at the moment. We have our structure here. The market have broken below the structure. So our weekly time frame. So the market is currently bearish, and I won't be selling any pair that has to do with Euro being the base. I have my reasons, because the COT data, Euro is very strong, and the bearish move on Euro pairs, that the pairs that Euro is the base, the bearish move is because the institutional investors are taking their profit on the Euro. So that's why the bullish moves are occurring. But Euro is overall bullish, so I won't be selling any pair that has to do with Euro. I will only be buying Euro. So going to another pair, Euro JPY. So here on the monthly, the market is complicated, so I won't be taking this trade. Euro NZD, the next price action from here. So the market is currently testing this support level. So let's see what we have on the weekly. Now the weekly is currently reacting to this support zone, creating this ICI. So let me go to daily time frame. So on the daily time frame, the market is currently pulling back into the zone. Now I'll be buying this pair, so I'm adding this to my watch list. Euro NZD, Euro USD. On the monthly time frame, monthly is stock inside of that range. Then weekly time frame, the M pattern have been completed. The ICI, the correction is stronger than the impulse. My students already know what I'm talking about. So you can see the correction is stronger than the impulse. So this is not a valid ICI. Now on the daily time frame, we have a strong move to the upside. Now if we will get a correction from here, the potential move to the upside is expected. Now day traders will be selling the correction, while swing traders will be waiting for the buying opportunity. So that's the difference between swing trading and day trading. Now when they see this move, when day traders see this move on 15 minutes time frame, they will say, the market is pulling back, they will start selling. And when they start selling to their TP, once the market retraces, and day traders are waiting for the market to retrace, once the market retraces, swing traders will buy, and once the swing traders are making money, the day traders, their stop loss are hitting. So that's why I don't advise you guys to day trade and all that. So if you're day trading, you need to be careful, because swing traders is where the money is. So going on GBP AUD. So starting on the monthly time frame, we have this move to the downside. So I need a move to the downside. So before trading this ICI that the monthly time frame is about to clear, that will be in 1 month, in 2 months time. This is June, July. When July candle close bearish, then around August, that will be when I will start looking into this pair, because of this ICI that is currently being created. So let me go to weekly time frame and see if I have a very nice price action from there. Nothing interesting. The daily is kind of stuck inside of this range, so the pair is invalid. GBP card. On the monthly time frame, this is choppy price action. From the monthly, this is choppy price action. So let's see what we have on the weekly time frame. Now the weekly, this is choppy price action, because there's no opportunity from the weekly. Then the daily, okay, the daily is currently, daily created the W formation, which the entry will be on the 1 hour time frame, and our take profit level will be at this point, because the market is currently reacting to this resistance level here. So the market broke above this resistance level, creating this manipulation and pulling back inside of that zone. So I need a move to the downside to test this red structure, to test this black structure. Now this trade will be only valid if I check my COT data, which I'll be doing after the technical analysis. So after adding this pair to my watch list. So GBP CHF, we are currently stuck on the monthly time frame. So trading this pair from swing trading perspective is kind of, so checking on the weekly time frame, let's see. On the weekly time frame, we have overextended to the upside, so we need a correction to the downside. Now this pair is currently invalid because the market is ranging. So GBP JPY is currently in an uptrend, if I'm not mistaken. Yeah, the market is currently in an uptrend, and the monthly time frame is overextended to the upside. So checking on the weekly time frame, also overextended, the correction is expected. On the daily time frame, also overextended, the correction is expected. Then a move to the upside is potentially expected. So this trade is currently not valid. Now GBP NZD, starting on the monthly time frame, a correction is being created, which the entry will be on August. So on the weekly time frame, the market is currently testing and reacting to the structure we have on the weekly structure. So this is the weekly resistance level here. This is where the market is currently testing. So this pair is currently risky. The pair is currently risky, so I won't be taking this pair. Now GBP USD. So let's see what we have. The market is moving up, breaking above previous structure. This is our previous structure here. So the market have already broke above the previous structure, and the retest is expected. So that's what we have on the weekly time frame. And the weekly time frame is overextended to the upside. if we see a correction to the downside, then I'll be buying the pair. Daily also of extended, so I need a correction to the downside for me to buy this pair. Now let me see what we have on NZD card. So NZD card is currently creating this M pattern from the monthly time frame. My student already know what I'm talking about. They are currently testing this structure here. Oh, sorry. So the market is currently testing this structure from here, which a push to the upside is expected. Now on the weekly time frame, the market is creating this impulse and correction from the NZD card, which a push to the downside is expected. Now let's see what we have on the weekly time frame. The market is currently testing this structure. Now from this pair, our monthly time frame is giving us a different price action, and our weekly time frame is giving us a different price action. Now what we are seeing from here is just a bearish move with this ICI. So let's see if we have a valid ICI from here. Now the market have already retraced the 0.382, so this ICI is valid. Now on the daily time frame, okay, the market also created an ICI to the upside on the daily time frame, so this is currently complicated. Now the only way we can solve this issue is with the COT data, so I've added this to my watch list. NZD-CHF. Starting here on the monthly time frame, the market is currently testing and rejecting a very strong support zone, which is this one. Break below it, created the manipulation, and already moving to the upside. Now from our weekly perspective, the weekly created on this ICI to the downside, but I won't be trading this ICI because the market created a double top from here, and a break below it will be risky, so I won't be selling this pair. Now on the daily, nothing is interesting from this pair, so I'm staying off. NZD JPY. So NZD JPY, from our monthly perspective, the market is testing very strong resistance area to push the downside. Now on the weekly time frame, nothing is interesting from here. Daily time frame, nothing is interesting from here, so this pair is off. Now NZD USD, the market is currently testing resistance from this area. A push to the downside is expected technically. Weekly time frame is currently testing resistance. Now this pair is complicated. Daily, nothing is interesting from this pair, so I'm staying off. So USD card. So USD card is testing strong support that the market need to reject to the upside. So on the weekly time frame, we have this move here with the M pattern created, and the completion to the neckline is also expected. So I'm seeing a bullish move from USD card. Now on the daily time frame, so I'll be adding this pair to my watch list and see what I have on the COT data. So I'm adding USD card to my watch list. Now USD CHF on the monthly time frame. This market is complicated at the moment, so I won't be taking this pair. Now USD JPY. From the monthly time frame, the market broke above this structure, and a retest is expected from the monthly time frame, from the monthly perspective. Now I'm going down on the weekly. The weekly have this impulse correction, which the move to the upside have already started. Now more bullish move is expected from the weekly. Now on the daily, this pair is complicated, so, and this will be interesting for day traders because they'll be seeing multiple opportunities from here. But as a swing trader, I need to stay off because I'm seeing negative price action for me. Then gold. I want to explain something to you guys with gold. Now many of you believe that COT data don't work. Now I want to explain something for you from here. So let me go to my COT data. So this is my COT data. Now you can see all the pairs I trade: USD, AUD, Euro, JPY, GBP, CHF, CAD, Mexican Peso, Gold, Silver, Russian Ruble, BTC, NZD, South African rand, and Brazilian real. Now, the CLD data is, remember, the market movers are the banks, like the big traders. Now, we believe that they are the market movers, but they are not. Nobody moves the market. Even the government, they only release the policy, but they don't actually move the market. Now, this is what happens. These traders, the banks, they analyze the market fundamentally and they trade in fundamental direction. So they trade based on the fundamentals, not technicals. Now remember, fundamental move the market, not technical. So since they trade fundamentals, now they follow trend and they trade towards the fundamental direction, not technical. So since they are trading with the fundamentals, which is more accurate than technicals, we believe that their orders are moving the market. Their orders are not moving the market, they are only trading based on the market move. Now from here, this is USD. You can see the long. This is the long position here. This is the buying position. This is the short, the selling position. This is the long, change long. This is the change short. This is the percentage, and this is the net position. Now, this is USD, and this data is released every week. Now, this is the data for last week, meaning that last week we have 22,000 buyers and 8,400 sellers. Now, out of this market, the sellers, they close their orders. This simply means that no one is selling this pair, because you can see they selling here, which is change short minus 4,154, meaning that 4,154 traders, bank traders, closed their selling position on USD. They also closed their buying position on USD, but they closed more shorts are closed than long, meaning that USD is getting bullish. And from here, from the next position, you can see the market is moving from, we have 11,000 net position here, 12,000, 12,000, and 13,000. So USD is getting bullish fundamentally. So CSD data tells you everything. Now USD is getting bullish fundamentally. Now, and gold. So USD is bearish before, but it's getting bullish gradually. So let's see what we have on gold, XAUSD. Now you can see that gold, we have 200, try to understand this, we have 227,317 long from here, and we have 67,000 short from here. Now this simply means that gold is bullish, but it's getting bearish. Now this is what happens from here. Sorry. Now check here. We have 245,000 long and 63,000 short. So let's check what we have currently. We have 227. So meaning that buyers are closing their orders on gold and sellers are coming in for gold. So let's see what we have. Now, last week, the market movers, as we call them, closed 10,000 trades, 10,000 buying trades on gold. They closed it and they opened 5,000. You can see we have minus 10,000 here, we have plus 10,000. You can't see the plus. So meaning that they are closing their buy and they are opening sell on gold. Now let's go to our trading view. Remember, they are selling gold and they are buying USD. So let's see the move we have on gold. So remember what I was saying about gold. Gold was bullish before. Now this is the monthly time frame. So we have this move here. We have 1, 2, 3, 4, 5, 6, 7, 8. Now for 8 months, this market has been bullish. So that's the bullish move you saw on the COT data. Now the market is now testing this resistance from gold. Gold have never break this resistance before. Now this is the resistance here. Now this is where they start selling. The sales you are seeing on gold, this is where the sales comes in. Now this is where the big traders start selling gold. Once gold approach here, they start selling. They move to the downside. Now day traders will be buying and selling gold on 15 minutes time frame, but swing traders will only be selling gold. You have no reason to buy gold. Since the bank traders are selling gold, you have no reason to buy. You only trade with their direction. Now here we have this move today. We have this move here testing this resistance here. and technically gold is bullish. Now this is what happened now. Fundamentally this pair is bearish, but technically this pair is bullish. So fundamentally we are seeing a bearish move on this pair from our CFD data perspective, but technically now we are testing resistance. We are testing support, and when you're testing support, you need to move to the upside. So technically this pair is bullish. Now if you don't trade with fundamentals, you will buy this pair because it's testing this support level now, and you expect the market is going up to this area. So if you don't trade fundamentals, fundamental is not news trading. Trading news release is not fundamental analysis. Fundamental analysis is different from news trading. So if you don't trade fundamental analysis, you won't trade this pair here. So if you don't trade fundamentals, you will just, if you trade only technicals, you will just start looking for buying opportunity inside of this zone to this zone here, and you're selling this resistance. But from our fundamental perspective, this market is moving. This market is breaking this structure on the monthly. So this is why fundamental analysis is interesting. Now we will see a move that will break this zone. This is a must. It can be in 3 months time, it can be in 4 months time, it can be next month, but this zone here must be broken to the downside. And as a swing trader, you have no reason to buy this pair. You only need to sell. Now let's see what we have on the weekly time frame. So here on the weekly, you can see that the market is currently reacting to this structure. You can see the structure clearly. The market is reacting to this structure. Now, for the past how many weeks? Let me remove the structure for us to see it clearly. Now, for the past 1, 2, 3, 4, for the past 4 weeks, that's 1 month, the market has been stuck inside of this zone. Now, the market is testing resistance. Instead of the market to break to the upside, the market is inside of this zone consolidating. And remember, when the market is consolidating, is accumulating for a big move. Now this move to the downside will come, and this zone here will be tested. So this trade from here, I'm expecting a sell from this pair, not a buying opportunity. Now let's see what we have on the daily time frame. The daily time frame is currently stuck inside of this zone. I opened the trade on gold previously, but I closed it because I saw this move to the upside. Now this is the zone we have on the daily time frame, and here the daily time frame is currently in a downtrend. Now you can see what we have from here. Now this pair is currently complicated. So what I'm expecting from this pair now is I need a move to the downside. This is what I need from this pair on the daily time frame. A move to the downside that will test this zone and reject to the downside. This is what will happen fundamentally. This is what the market is telling us. But technically it's telling us that the market is buying, but fundamentally it's telling that the market is selling, and fundamental always win. So this will be the end of this analysis. Now let me check the pairs I've added to my head list and combine them with my fundamental analysis. So these are the pairs I added. So AUD, NZD. Let me start on the monthly time frame again. So AUD, NZD. Remember, the market is testing resistance to the downside. Weekly, we want to sell this pair. Now remember, we want to sell this pair, so we need to check what we have on the COT data and see if it corresponds with this sell, we sell. If it don't correspond with this sell, we don't sell, we remove the pair. So here we need to check our AUD and NZD pair. So let me check AUD. Remember, AUD is the base, NZD is the quote, so I need a weak AUD and a strong NZD to sell that pair. Now this is what we have here. Remember, in AUD we have 100,000 shorts, that's 100,000 sellers and 38,000 buyers, meaning that we have more sellers and buyers, so the pair is weak. So with the last report, 15,000 buyers, 15,000 buying trades are closed. 2 weeks ago, 14,000 buying trades are closed. Now more longs, more buying trades are closed, and lower shorts are closed. Now from the next position here, we have 44 minus 44, we have minus 56, and we have minus 61, making AUD weak, which is what we need for AUD and NZD. Now let's check what we have on NZD. NZD. Yeah, NZD, we have 15,000 longs, 16,000 shorts. So we come from 14,000 longs, 16, 16, 16, 15, and we come from 16, 17, 16, 16, 16. So this pair is currently neutral, and the move to the downside is expected. So from the COT perspective, this move to the downside is valid. So I need a move to the downside from this zone to test this area. Now the question is, how do you identify your entry point? That's where the work comes. If you don't learn how to identify your entry point, you will enter wrongly, and once you enter wrongly, you will lose the trade. So this is the 4-hour time frame. We'll be entering on 4-hour time frame. So my students already know how to enter the market. Shift of environment, you place your trade, stop loss above previous structure, and target the downside. But remember, my students will remember that the market need to test this zone deeper test of this zone before the move to the downside is expected. So this pair is currently valid. Now let's check another pair in our watch list, AUD USD. So AUD USD move to the upside weekly. So remember, we are also selling AUD USD from here, but the market is currently breaking above structure, so this trade is kind of risky. So selling this pair is risky. Remember, we are selling on the 4-hour time frame, not on 15 minutes time frame. So AUD USD is, we are selling the pair. So we already have our weak AUD. So let's see what we have on USD. We need strong USD. Now you can see that USD is getting strong already. I have explained the pair. So USD is getting strong. So this potential move to the downside. So this move to the downside is expected, but this pair is risky because of this zone we have here. Technically, we have this zone here. So this pair is currently risky. Now the markets will likely not be able to touch this zone. So it will be risky for the market to touch this zone because we have this structure here from our Fibonacci, and we also have this structure here technically. So the markets will not be able to touch this zone. It can also touch this zone, but it will be risky to touch this zone. Now you need to be careful while placing this trade. So I'll be placing the trade, but I will be more careful, and I will go risk free as soon as structures are created. Now the CAD JPY, let's see the move we expect. Move to the downside. So we want to sell CAD JPY. Let's see what we have on the COT data. So here we check what we have on the card. So the card, you can see the card is weak, which is what we need on the pair. So we have a weak card from here. We have 15,000 long and we have 52,000 short, meaning 52,000 sellers, 15,000 buyers. So meaning the pair is currently weak, and longs, short are closed with the last report. Short longs are also closed. So our net position, we have 48,000, 29,000, 38,000. So the card is weak. Now let's see what we have on the JPY. So on the JPY, we have 141,000 short, 37,000 long, meaning this pair is weak, and longs are added with the last report. Shorts are also added with the last report, and the currency is also weak. So this pair is invalid. Now these two pairs, CAD and JPY, they are two weak currencies. So I will be placing this trade from my fundamental perspective. I will be placing that trade. Now Euro AUD. Okay, we are buying this pair from our technical. So let's see what we have on the COT data. So Euro AUD, Euro is strong. You can see what we have. Euro is strong. Now we have this move. We have 226,000 buyers, 74,000 sellers. Now let me also explain something with Euro AUD for you to know that COT data is working. Now let's go to our chart. And you must know that if you are a day trader, you don't need COT data. Now, this is our daily time frame on Euro AUD. You can see the market is in a massive uptrend. The market has been trending upward since June 2022. This is 1 year now. Since 1 year now, the market has been trending upward, and we have this move to the downside from here. Remember, we are in an uptrend. From here, we are in an uptrend. Then suddenly we have this move to the downside. Now, why do we have this move to the downside? The COT data explains everything. So let me explain deeper. So this is the euro. Remember, euro is bullish, and for that correction to occur on the daily time frame, that means the big players are selling euro. Now, just watch for the past 1, 2, 3, 4, 5. For the past 5 weeks, they have been selling euro. Now, this is what happens from here. You can see they closed 1,500 buying trades. They closed any trade that have minus, meaning they closed, that they removed. So they closed 8,000 from here, closed another 8,000, closed another 5,000, closed another 9,000. So they are closing the pair, meaning they are selling the pair. But that doesn't mean that the pair is weak. The pair is overall strong. The pair is bullish, but they are currently selling the pair. Now, this is what manipulation is. They are trying to manipulate you to start selling that pair. If you don't have the knowledge that the market is an uptrend, you will continue selling the pair. So that's why I said I won't be selling any pair that have to do with euro. I will only be buying. I will only be looking for buying opportunity. Now let's see what we have on the euro. Remember, our AUD is weak. So here we have a weak euro. So let's go to our MT5 and see our trading. So here from our trading view, this move is valid. So I'll be buying this pair to this zone, but I will also wait for price action instead of this area before buying. If you don't know how to enter the trade, don't enter the trade. Just join my class and learn everything. So I'll be waiting for deeper test of this zone before buying this pair. So let me go to the next pair, Euro NZD. So Euro NZD, it seems as I'm also buying the pair. Let me check. Yes, I'm buying the pair. So let's check our COT. Remember, our euro is strong, NZD is okay. Yes, this trade is valid from the COT. We have to check the euro and check the NZD. So the trade is valid. Now let's check what we have on the GBP card. So here from our GBP card is selling. We want to sell the pair. So let's check our COT data. So starting here on the GBP card, let's check our GBP. GBP is currently strong but getting weak. Now let me explain. GBP here we have 76,000 long, 69,000 short, and from here we have 77, 70, 69, 70, 65, 65. This simply means that longs are being closed and shorts are being added. So you can see with the last report, they added 17,000 sellers are in the market and 11,000 buyers are in the market. So making the market short-term weak. Short-term weak, not long-term weak. Now let's see what we have on the card. So the card is weak. This simply means a bullish move to the upside. Now our COT data is telling us a bullish move to the upside, but here I'll be going with technicals. Why? Because the GBP is neutral last week because we have 17,000 shorts and 11,000 long. So I'll be going with this move, but this will be a very risky trade, so I'll be entering on 1 hour. If you don't know how to place your stop loss, just stay away from GBP card for now. So I'll be taking this trade by Monday and all that. So let me check NZD card. So NZD card, remember we have weak card and all that. So let's check if we are buying the pair or selling the pair. So we have this daily ICI. Let me see the correction we have. So I'll be buying this ICI, and this will also be a risky trade. So let me see if deeper correction is expected from here. Now the market can come down to this zone by Monday, but I'll be buying this pair. Yeah, I'll be buying the pair. The USD card. Okay, we are buying USD card, right? Yes, so we have with USD getting weak, so this pair is valid. Now this is all for this analysis. So this week I'll be looking at AUD NZD, AUD USD, Euro AUD, Euro NZD, GBP card, NZD card, USD card. Now this is the pair I'll be looking at. But at the end of the week, I might trade only 3 pairs from here, meaning the pair that gave me the best price action. That's the pair I'll be trading. So this is all for now.